Good day. Welcome to week 5 of the Soy Market Watch. I'm joined today with Bob Linneman, and we have a lot to talk over. We intentionally are doing this after the USDA crop reports, and they had a lot of very interesting numbers, and we're going to really focus on those numbers. This is our standard risk disclosure statement. I'm not going to read the whole thing. I'm just going to let you look at the two things that I've highlighted in red, that if you trade futures and options, you could lose money. Then the last sentence in the last paragraph, opinions expressed herein are the opinion of the author only and not the opinion of any firm author may be affiliated or associated with. So this is put together by the Kleiss team, and certainly Bob is one of the valuable members of that team helping us put stuff together. We're going to look briefly at what happened in the markets last week, a price summary. This what happened last week versus last year. The main factors to watch this week, and then the real meat of the program is the USDA reports. I think the last two slides are really the most important. Don't leave early because we want to talk about some of the price targets that we have and some of the key timing that I work with in both the corn and soybean markets. So last week, weather was perfect. We had rapid planting progress reported all across the Corn Belt. Even some of the wet areas, northeast Iowa, southeast Minnesota, got back in the field. Great progress made in the southern Corn Belt as well. I'm going to speculate that the report on Monday will show corn planting progress at about 62 to 64%. One of the old rules I have is that to get a trendline yield on corn, you need to be at least 50% planted by May 10th. And wow, we blew right past that this year. Progress on the soybeans should be 50% plus. I didn't see the report from a year ago, but I think this is at or near a record pace. I don't think we've ever had so many soybeans planted in April as we had in Minnesota and Iowa this year. So the early planted beans, where they seem to get the big yield push, has really been a market factor. What happened? Soybeans closed in a fraction lower, but well off the early week low. Been very impressed. We threw a lot of negative news at the soybean market, and so often we'll trade, and then by the end of the day, you come back. And so we saw that day after day last week, and most critically, the nearby contract held at 10.27, so the bull flag is still in place. Corn prices lower for the third straight week. We expected USDA to show a larger crop from South America, and we certainly did see that. Futures, though, are holding right at support, and after trading lower early today, are now back in the black. Cash basis levels continue to improve, and some of that's just a function of farmers are just too busy in the field. You have to really watch your basis levels and stay aware of the huge invert that the current cash market price for May, June is significantly higher than the bids are in August. The weather is really becoming a factor. How quickly we've went from ideal planting conditions to where we need rain. Talking to producers in Northwest Iowa today saying, are we going to get that rain Thursday, Friday? We really need it. We need moisture to come through for moisture to come in. So that's going to be a major market factor. Looks like cooler, more seasonal temperatures by Thursday and Friday, along with pretty widespread rain. I've seen it described this way that storm is going to track from Nebraska up to Michigan. So most of Iowa should be in line to get some very beneficial rains. Perfect timing if it works. Get the crop planted, get a little field work done, get some spraying done, then get some rain. So it's important that it hits. If it doesn't, this is like the only rain event we see. Dollar really surged higher today. We saw the U.S. and China put together a template for a potential trade deal. Pause the tariffs. It looks like the tariffs going into China now have been reduced to 10%. Our tariffs on products coming in from China are going to be about 30%, and there's a good chance that the 20% fentanyl tariff may not stay the full 90 days. I think China is making a real effort to slow down the shipment of chemicals to the U.S. that is used to make that terrible drug. So this is something we watch. We are still just over a 100 100%. Where are those moving averages cross, Bobby? They're all at about 102 to really turn the trend, aren't they?
Yeah, actually, Al, today's high in that US dollar is right at the 50-day moving average. We
Okay.
have not closed, and this is on the June contract, so not the continuation chart, but the June contract. We have not really closed significantly above that 50-day moving average since early February. So
Okay.
a strong close above that would really open the door probably toward the 104 and a quarter range on that
Hmm.
dollar, just as old highs and kind of some retracement targets. And the 100-day moving average is up there at 104.65. So a couple
Thanks.
big targets there.
Great work. Sometimes too, when foreign buyers see the dollar strengthening, long term it hurts our export. Short term, you can see them race in to try to buy as much as they can. Their currency goes further as the dollar looks like it's going to get stronger, so they're better off to buy today, even though grain futures are higher, than to wait till the stronger dollar really raises their price. Last week, as indicated, third week down in the corn market. We went down to 420. We had a 434 low on May corn. 430 was the bottom end of what I thought would be interesting on the December corn now, especially with the market action today. We kind of have a broad base at 426. The low over the last several weeks, I think in May beans, nearby beans, has been 1027, 1029, 1029. We closed down a nickel, but we were only 5 cents. We're only 4 cents off of the high of 1048, and well off the low. I think it's important to note that this week the May contracts go off, and the July contracts become the nearby contracts, and they're trading significantly above. So when I envision what the charts are going to look like next week, I think this week could prove to be a spike low on the long-term charts. Factors to watch this week. I always look forward to the time when this is not number one. Washington, D.C., will the trade details of the new China trade agreement show? There's some optimism in the ag industry that we could revert back to the phase one agreement, which required China to buy $80 billion worth a year. I think that's a stretch. It's not impossible. But to be honest, I didn't think we'd come into Monday morning and see the outline of a deal done after two long, very long days of negotiation between the U.S. and China and Switzerland on Saturday and Sunday. Rain event, how much rain hits and where? Thursday and Friday is pretty important if you're trading the markets and looking at weather. Missing that could be bad because that is really the only chance for rain we have in the next 2 weeks. Planning progress to be 60, 62%. This is becoming less of an issue. Get ready. Next Monday, the USDA will start to release the crop conditions report. And just based on the way the crop went in the ground this year, Bobby, would you say 90% of your customers are saying it's some of the best crop conditions ever?
Yeah, they really are. Ground conditions are amazing, and they just the comment that I've seen or heard more in the last, I would say, week, Al, is that we need a shot of rain. The
Yeah.
Western Corn Belt needs a shot of rain. If we do miss this one this week, things they're going to get more nervous. Let's put it like that.
Okay. Look at the numbers here. These were released from the USDA 11 o'clock Central Time. I always compare what did we get? 1.415 billion bushels of ending stock. So think of this like your checking account. At the end of the month, are you having more and more money in your checking account? Then you've got adequate supplies. If you have less and less all the time, then price has got to do its job. And versus where we were a month ago, all of a sudden we're 40 million bushels less. Why? Because we're exporting more. I had thought we would have somewhat less, but the USDA even did better than what I expected, 1.415. Soybeans, the numbers came down from 375 to 350. Again, I had the trend right. I thought I'd go from 375 million bushels of ending stocks to 360. But what's significant is that this is less than last month and less than what the trade thought. So the trend is good. We are selling soybeans. Wheat continues to be a dog, and we just seem like we can't get a positive report for wheat, and this also then weighs on corn prices. For the 25-26, and this is fascinating to me, this is our first look ahead. when you use the March 31st acreage of corn and soybeans and trendline yields, I thought we'd see ending stocks jump up to 2.020 on corn, 2 billion 20 million. And that's what the trade had expected. I thought it could be even more than that. Obviously, USDA sees things differently. They came out at 1.8, so this is very positive. For soybeans, this is amazing. Traded looked at 362. Al the bear was at 380. Wrong. USDA must see really, really good exports next year. This is an amazing number, Bob. And I looked at, you have 1052 November 26 beans here today, up 20 cents. We need good crops this year and next year. And I hope we get them because it seems like the world demand continues to grow. The problem we have in the grain industry is 923 million bushels. I talked to two farmers in North Dakota that said, hey, we are done planting spring wheat. We can't make money. We grow 90 bushel an acre wheat, and at the current wheat price and the discounts, they're using those drills and they're going to plant more soybeans. So maybe that'll show up later in the end of June report. But these numbers, Bobby, your thoughts on these? Were you surprised?
I was very surprised actually, Al. That corn number is a much a much bigger change than I think even what some of the most bullish traders were looking for at 1.8. The soybean number under 300, Al, that's a big number because we're using a yield in corn at 181 and soybeans at 52 and a half.
Yeah.
So those are some big targets right now for yields. We haven't hit trendline yield in corn for the last 7 years. So even if we're just close to it, these numbers could come down even further with any type of a weather situation. So risk premium will be added quickly if we if we miss this rain this week, I think,
Yeah.
Al.
Yeah, there's 295. It's and when you look at a stocks to use ratio and the projected usage, this gets down to about 10 or 12%. Historically, that gives you some $12 beans. So this was and people have said, oh, USDA is always wrong. I don't agree with that at all. USDA has got a very solid track record. They've got global resources to put these numbers together. Any stocks for this year's crop in the world, again, a lot of numbers. I don't want to dwell on them too much, but what's important for producers to look at is what does USDA say versus a month ago? Where is it versus a year ago? And we've had a good corn crop last year, but we're seeing it gradually get used up. Soybeans a little bit larger than what the trade expected, a little bit larger than a year ago, but right now soybean prices are about $1.80 a bushel lower than they were last year. So a lot of these numbers are factored in. Then we shift ahead, and this is the first time we've had to look at these numbers. Not had a lot of time to crunch them, but again, corn, global ending stocks, 313. Trade thought 296, and wow, 277.8. And this is forecasting 96 million acres of corn, 182 and a half bushels. Bobby, I'll repeat myself. We better have a good crop.
We have to have a big crop, Al. I
Yeah.
mean that number, the line in the sand for a reference point to is 300. Anything under 300 is a bullish number, and the trend for this continues to be going downward. It really does, Al.
Yeah.
So, and the soybean number, kind of that line in the sand, is closer to 105-ish, something like that. So that number is a little bit more comfortable, but that corn number is definitely worth watching.
But that corn, that B number, 124.3, that assumes, Bob, that we're going to have 52 and a half bushels per acre. And if you look at the map of where we're increasing soybean acres, good luck with that. The further we take the Corn Belt north and west, the less likely we are to hit those big USDA yield objectives. So this
Yep.
is going to be interesting. Wheat, well, we have to figure out, and I think in the world we're going to see people continue to cut back on wheat and plant more oil seeds, whether it's canola, sunflowers, or soybeans, because that seems like that's what the world really needs. So these reports coming out today were short-term and long-term very positive. So corn, like I said, we held kind of right where we needed to on the chart at about 430. That said, I'm hoping we get up to about 485. I'd like to get some more corn sold. The last hedges we recommended were up at 508, and we didn't sell the whole crop, but we sold a lot of the remaining cash inventory. For soybeans, this is what is called a bull flag. If we can hang on to these gains in here, you're going to see the market go at 1060. Keep in mind, Bob, that July contract becomes the nearby contract at on Wednesday, and we're going to be above 1070. So we've been just in this extended trading channel and above there. So I'm optimistic on soybeans. I want to stay disciplined on getting the cash sold, but the reports today, the market action, it's really been nice, Bob. So far, knock on wood or knock on my computer, the market has been staying fairly orderly.
It has, Al. Nope, it surely has. So we just need to keep that orderly movement in the correct direction.
Here's a couple of price targets, just 485 and 498. Be aware, how much your cash market is inverted. May, June is the time to get cash sold. To get cash all sold, we're focused on 25 and then 26. There is good support down at 462. Soybeans, 1078. We're getting pretty close to that right now on the July contract, and I think $11 will be good to get through. So longer term, ever since we started doing these soy watch things, I've been optimistic on soybeans, but I also want to say very seasonal seller. We get a rally here into May, into the end of June, man. We're going to have the cash crop sold. I don't want to go back to meetings in August in Iowa and see people with too much inventory. Key dates to watch. These are some of the key dates that I really anticipate. These don't always all work, I'll be very honest, but watch the prices May 22nd, 23rd and then around June 18 to 20. These are always a key time. And this isn't always true, but certainly these are some key time periods to watch, not only for corn, but soybeans. So I like to be specific and try to give you worthwhile, useful information by giving you very definite price and time targets. That's it today. Bob, thanks for your help. And thanks for all the Iowa Soybean Association and their work. Really enjoy working with them. Got a great team there. I don't mind. Give me a call. This rings right in my office, 888-345-2855. If you prefer to email me, you can reach out me, alan.kleiss@wedbush.com. And if you got specific contract questions, marketing questions, reach out to me. And again, a special big thanks to the Iowa Soybean Association.